Are you considering making a move in 2023? Concerned with the interest rates and want to get the best rate possible? In today's video, we are going to look at 3 ways you can lower your interest rate and take advantage of the currently lower home prices and decreased competition to find your dream home. Let's get into it. With interest rates over double what they were just 1 year ago, many buyers have decided to hold off on purchasing a home. At the same time, there are many sellers who would like to sell their home but don't want to give up their currently low interest rate. Because of this, we are seeing the market flatten as there's not a lot of new homes coming on the market, and the current homes that are available are taking longer to sell. If you've been watching our channel over the past couple of months, then our first tip will come as no surprise, as we've mentioned it frequently over the past several videos. And if you're new here, you'll want to hit that like and subscribe button so you can stay up to date on the greater Seattle real estate market. The first tip is having the seller buy down your interest rate rather than lowering the purchase price by the same amount of money. This is called a rate buy down, and you can do it too if you have extra funds available. To break this down, as a general rule, 1 point costs around 1% of the loan amount. So if you're purchasing a home that is $800,000, it would cost you around $8,000 to lower the rate by 1 point. How much does that point get you in interest rate? Well, that depends on the type of loan you're getting, the current market conditions, and the lender you're using. Also, you'll want to run the numbers with your lender to find the break-even point on buying down that rate. If you're looking to stay in your home for less than 5 years, it may not make quite as much sense to go with this option. Always remember to do the math to understand how long it will take to make the rate buy down make sense. Now, the second tip might seem obvious, but you'll want to shop multiple lenders to ensure that you're getting the best rate possible. You would be surprised how many buyers simply go with their local bank or only apply with one lender. Rates are always fluctuating, and so are different loan programs. That's why it's so important to compare lenders to ensure that you're getting the best value. If you need a good lender, reach out. We have an amazing referral who's helped many of our clients. Remember, you don't need to commit to a lender until right before submitting an offer. So don't be afraid to talk to at least 2 to 3 lenders to compare terms and options. You'll also want them to run numbers right before submitting an offer so that you have the latest data. Tip number 3 is looking into an adjustable rate mortgage, or ARM for short. This is a mortgage that typically starts with a lower interest rate than a fixed term mortgage, and then it adjusts higher over time based on the current market conditions. Now, with this option, you need to know your risk tolerance because an ARM has less certainty than a fixed rate mortgage, where your interest rates stay the same over the life of the loan. If you plan to increase your monthly income in the next several years, this could be a very good option for you to purchase a home that fits your monthly budget now and then plan to have it increase over time. You could also make a home purchase now and then refinance into a fixed term mortgage if and when the rates come down in the future. And for our 2 bonus tips, you could 1, increase your down payment, or 2, work towards increasing your credit score. Putting just 5% more as a down payment can significantly decrease your interest rate. You can also work on increasing your credit score. The best way to find out how to do this is to ask your lender for their advice. They already have all of your financial documents and can point out the best ways to go about increasing your credit score. Remember, rates are fluid. We've seen a lot of this over the past 9 months. Make sure you talk with your lender about all the different options so that you can make a plan that fits your lifestyle. Knowledge will help you feel empowered, and it always comes down to your needs rather than trying to time the market. If you liked this video, then you'll want to watch this one on why Seattle is so expensive. See you next time.